welcome guys to another episode, and today I'm going to be speaking about phases of price, AMD, and power of 3. So let's get into it. If you've noticed, we go through different cycles or phases of price action, and what that looks like is this. So if you see price moving sideways or having this choppy sort of price action like this is known as accumulation or consolidation. And what that is price collecting a bunch of buy or sell orders. And so it creates this sort of sideways movement where price has no definitive direction. And so what price is doing is it's generating liquidity as it's accumulating, with all these relatively equal highs and lows telling us that there is liquidity resting on either side. So if I make this purple, you'll see this all over the chart, and they're fairly easy to recognize because, as I said, they don't have a definitive direction, so you'll see it just move across the screen like that. So this would be your accumulation phase. Now, power of 3, since I said there's 3 cycles, AMD and power of 3 are essentially the same thing, just different terms. So you won't hear me say power of 3 when I'm busy analyzing the charts, but you will hear me say AMD a lot. Now, speaking of, the next phase, which is M for AMD, will be our manipulation phase. And what that looks like is simply a sweep of our liquidity. So this section right here, price goes and grabs liquidity generated by this accumulation with a quick movement, reversal, and back inside the range. And another example over here, price sweeping this high. It's another form of manipulation, because why? We don't displace, we just manipulate. We sweep the high, reverse, come back inside. Here we don't get a manipulation because price just continues direction. So where's our next manipulation? Over here. See price sweep these relatively equal highs at this accumulation. We manipulate it and we come back, reverse inside. Another example right here, same thing. We want to see price grab liquidity, reverse, and continue the overall direction. And you'll find these manipulations usually during news time or around our session opens, like London Open, New York Open. That brings us to our next phase, which is distribution phase, and that is when price rallies or falls with these large impulse moves. And that's essentially where you want your trade to be. You want to be where price is pushing with the most volume and momentum towards your bias, okay? Now you can find these phases throughout the chart, but there is an ideal way to use these concepts, and that is simply by remembering AMD in that order. So let me show you. So this is our AMD model. So in order to utilize this, we want to first spot our accumulation. Thankfully, that is relatively easy to spot. You just want to see price ranging without any specific direction. And so while that is happening, we are anticipating price to manipulate. So we want to see price break that range from either side, and that's when we start applying our entry models. So whichever way you prefer to enter, whether you enter on order blocks, fair value gaps, inverse fair value gaps, this is where we can start looking. So we want to see price manipulate, sweep to drive prices higher. And so once we confirm the manipulation, you want to then enter once we see signs that we will start distributing. So for example, if you see your entry model here, price sweeps, creates inverse fair value gap, and you enter on that inverse, Ideally, price will start distributing, and that's what you'd like to see. You want to see price moving away from your stop loss, and that's why distribution phase is the best time to participate. So let's see how that looks like on candlesticks. Here's an example. You see price creates a range where price is not moving in any particular direction. And I assume we are bearish on the higher time frame. And so that's why we see price manipulate higher, sweep the top of that range, come back inside, and then distribute lower. You can see quite a few entry models apply here. If you wanted to enter on the fair value gap, there's your entry right there. There's your entry. If you wanted to do the inverse fair value gap, your entry will be at the close of this candle, and so on. Go check the link in the description if you'd like any of the guides on how to apply these entry models. But yeah, that's essentially what AMD and Power of 3 are. But I want to show you how that looks like on the higher time frame. So you have to switch between time frames if you want to see or spot certain phases. So this is an example of how an accumulation phase will look like on the higher time frame. So you'll find these doji or spinning top candles that look like this. For example, this was the 4-hour candle on Thursday, and if you zoom in, this is what price action looked like just before New York open. And if you remember, I said sometimes during New York or London open, our session opens, we will have our manipulation phase. And this is where we see that price action get manipulated, right? So after we have our accumulation, the start of the next 4-hour candle on the higher time frame, you see price manipulates. In other words, sweeps the low of the previous candle. And what that looks like is exactly that. We sweep the low of this accumulation range, and that means we do not displace. We don't see any body closes, and therefore we are manipulating. And so what's after our manipulation phase? We get our distribution phase, and that is the bulk of the candle right there. As you can see, after that manipulation, price then pushes higher and forms this large distribution candle. And you might be wondering, okay, well, if this was our accumulation initially, why wasn't this our manipulation? Good question. Well, when we manipulate, we want to see other things that are supporting that manipulation. For example, look at this manipulation. We have momentum, we have volume driving price, and therefore we have a valid manipulation. We don't see price moving anywhere after this manipulation, so we can't confirm this as a valid manipulation. So what we just extend that as the new high of the range, and we keep waiting until we do see a valid manipulation. So again, when we manipulate, we want to see momentum, volume, we want to see fair value gaps, we want to see everything that supports pushing price in its intended direction. And so that's why this one is not a valid manipulation. So let's get into some more examples. So if we look at this example, we see price is clearly bullish. We're on the 15-minute. Price taps into a higher time frame confluence, sweeps liquidity, and pushes higher. And then what do we see? Price retracing, pushing, retracing, pushing. And then we see price here consolidating. Why? Well, we see these bunch of indecision candles. Price moving sideways. So what's that? That's our accumulation. So what do? We mark out the top and the bottom of the range. And we wait for either side to get taken out. And ideally, since we're bullish, we want price to sweep the lows so that we continue our push higher. So we'll wait for that. Okay, we see price sweep the high, but continue back inside the range. So this becomes our new high. Price sweeps the low. This becomes our new high and low. So what does price do then? Aha, another sweep. Are we tapping into a higher time frame confluence? Yes, we are. There is a 15-minute fair value gap right there that price is tapping into. And what's the reaction from there? Let's zoom into the 1 minute. And look at that. That is a perfect sweep. We're leaving behind gaps. We are very in a hurry to come back inside the range. And we've got higher time frame confluences. And most likely we have broken structure to the upside. So yeah, you would apply your entry models with your breaker structure, order block, fair value gap entry, whichever you'd like. That would be our breaker structure or our shift. Enter with whatever strategy model, entry model that you use. And then we target minimum the top of the range. And then from there on, target the rest of the way. Just depending on what your targets are, what your risk to reward ratio. I'm going through this quickly because we've spoken about entry models and how to enter already. So this is just in general showing you that we can use AMD as a strategy in order to catch reversals and trade the distribution. So we'll see how that goes. In fact, let me go on to a higher time frame so that this goes quickly. Okay, you can see what price does. Boom, just like that. That is how you enter on an AMD. Let's look for some more examples. So what you'll find is that we don't always manipulate. Sometimes we will go into distribution phase without ever seeing a manipulation. And that's fine. The best thing is to know how to identify it. If you see price displace instead of manipulate, like in this example, see price accumulates and we never see a manipulation down. Price just goes and displaces up. It doesn't fit our typical AMD model. We can pretty much just enter on our retracement with however your retracement strategy looks like. But ideally, we want to see manipulation before we distribute, because that is our high probability setup right there. Here's another example of where price consolidates. And you can see this is on the 15-minute chart. And it's a huge consolidation on the high time frame. You can see you can use multiple time frames for this kind of setup. So you can see price manipulated, and what's price doing? Price is going straight down to distribute. Now here's a tricky one. We have consolidation, right, on both sides. I'm using NASDAQ and S&P side by side to compare. Now normally you'd think, okay, this would be the sweep right here. There we've got inverse, we've got fair value gaps, we're moving, we've got volume. You might think that's the sweep initially, but no, we're missing a crucial part of our manipulation. We're not sweeping liquidity in any sort of higher time frame or any sort of confluence. There's no context behind this sweep. And if you look at news, we are coming up to a news candle, some FOMC action happening here. So in normal circumstances, you wouldn't be entering off of this because this is not a valid sweep. And so what? We wait until after news. And there you see we get our sweep right here. And what's our context? Well, we're also taking out this low right here on NASDAQ, but we didn't take out that low on S&P, and so therefore we've got an SMT divergence happening, and that gives us our confluence, our sweep, everything we need. So then we can enter on our entry model whichever, or off of a retracement, and then we push higher. So that's essentially what AMD is and how phases of price work. Again, look for the setup on multiple time frames. You can find this AMD setup more often than not, almost every week. It's a very good model to trade off of. I use it quite often, and it's very easy to trade because you know that whenever we see a range, we just want price to take out either side and then continue its intended direction. So I hope you guys found this easy to understand. If not, I do have a guide for AMD in the description if you want to check that out. It's in a nice PDF format so you guys can download it for free. Otherwise, there are links to all the other strategy guides as well. So hope you guys have an awesome rest of the week. Looking forward to trading on Thursday. Please make sure to keep updated with my videos by hitting that subscribe button. Please like to support the channel, and I'll see you guys in the next one. Cheers.